What a day it has been, and what a fantastic start to the trading week. 25,000 quickly conquered by the Nifty and staying steady there. 25,025, not too shabby at all for a market that was adrift of cues, and where the largest cue actually came over the weekend, of course, from Fed Chief Powell at his speech in Jackson Hole. But you know, the story really also about the bank Nifty, about 0.5% up now, the Nifty nearly 1% up, and the Sensex as well. So all in all, it has been a fabulous day. Let's just pull up the intraday chart for the Nifty and the advanced decline ratio to give you a sense of how rock steady the momentum has been. Touching highs of 25,043 and not too far away. So steady 200 points up through most of the day. Advanced decline ratios will also tell you that this is not just a Nifty story, though broader markets are perhaps not doing as well as the Nifty, but you have the advances overpowering the declines, at least for now, not by that much. Let me just quickly pull up the mid-cap and small-cap indices before we get to the heat map. And, you know, this is what I'm talking about. You are seeing more of a Nifty push today, and some key contributors there, largely the IT companies which are doing that. But the mid-cap 100 still in the green. Not even 0.5% up. The small cap 250 also not even 0.5% up. So let's just pull up Nifty contributors for a second and give you a sense of what is really powering the Nifty. And it's an HDFC Bank that has come into its own after quite some time, and RIL. And one would reckon that between these two heavyweights, most of the strength is coming in. Of course, like I said, IT is the theme of the day. And now when we get to the heat map, you'll see why I'm saying that. So obviously, rate cuts means more demand coming in the US, good for IT companies. That traditional sort of thought is panning through when you look at the top line today. But even apart from that, Hindalco, great day for metals. The same theme panning out, because if you have one of the largest economies in the world seeing demand coming back because of rate cuts, metals will largely do well. ACL Tech, NTPC, ONGC doing well because of production ramping up in their KG basin, well, and that's really worked for them. Tech Mahindra also doing good today. Wipro, LTI, Mindtree, some of those up there. Apollo Hospital has been the big loser of the day, about 1.5% down. Hero, Moto, Eicher. You know, auto was the leading story or the leading theme on Friday close, and that has run out of a bit of steam. So today, Hersh, for a change, I won't say that the biggest buzzers are in the broader index. Of course, you have a list of those. But today, the story is about the Nifty.
Absolutely. The Nifty is steady as a rock, really, essentially. It's breached 25,000. It's held on very, very firmly to that. So I think that's what's really impressive. That's what is really standing out, at least for me. And of course, plenty of movers within the broader markets as well. Both sides. Let's start off with the positives. Zentech up 5%, 1,000 crore odd fundraise. Shilpa Medicare also up roughly 5% odd. ONGC, we spoke about that one. KC International new order win, 2% higher on that one. And we are also seeing good traction on Ashoka Buildcon on the back of order wins, 1.5% higher. You have JSW Energy also buzzing by around 1% or 1.5% or thereabouts. Among the big losers, Zydus Life for me, 6% lower on the back of acquisition, plus some bit of drag even with regard to Sun Pharma getting approval for their new generic drug. You have within the newly listed universe, Interarch Building, which is up 35.5%. On the back of course, its first day of debut, making it. And MedPlus Health, some blocks, 1% higher, thereabouts. Zydus Life also around 1% higher, 7% of Zydus Life exchanging, Eris Life, I stand corrected, changing hands, 1% higher, off market on Friday. So Eris Life up 1% even post that. But among some of the big movers on the back of brokerage notes, you have Bansal Wiring up almost 6.5% in trade. Emcure Pharma is up 1% or thereabouts as well. Jefferies bullish on that one. And First Source is down 2.5% despite good commentary coming through on its analyst day. Also, in terms of some of the other notable names, which are moving. I want to point out within the defense pack, you have Mascon Dock down around 2%. Zentech, of course, we spoke about, but Garden Reach is up around 1% because that entire theme was buzzing pretty much all through last week. So just wanted to quickly mark out some of them. Otherwise, within the mid-cap space as well, you look at Kalyan Jewelers is up 5% again. Last week we had promoter buying there. Sale within the commodities pack up 5% as well. Lodha is the other one, including the entire realty pack. Lodha also up roughly 4.5% odd. And within, again, the smaller cap segment, JM Financial up 13.5%. Honasa also up 10% odd. PB Fintech buzzing as well. And Motilal Oswal Financial Services up 9%. So what a run some of these stocks have had over the last month or so, especially the likes of Motilal Oswal, Tamanna.
Yeah, so a lot of buzzers there and some interesting stories that we're seeing as well. We'll get into a bit more detail, but let's talk about where the index is going next. Hemen Kapadia, Senior VP Institutional Equity at KR Choksi Securities, joins us this afternoon. Hemen, always a pleasure to speak with you. And today is a good day. 25,000 reclaimed fairly painlessly, and we're staying steady there. What's the next target you see?
A very good afternoon to you, Tamanna. Thank you for having me. It's always a pleasure. I think you're wearing a green dress. I'm wearing a green shirt. The markets had to be in green, but anyway.
Because of us, Hemen. It's all because of us. We would take all the credit.
Okay, that was just going overboard. But yeah, see, 25,078 is where the previous all-time high is. So that's where we could run into a spot of bother. The VIX has crept back to 13.88. It staged a strong comeback on Friday. Now we have the weekly expiry, Bank Nifty, monthly expiry, sorry. There is geopolitical tension, but no event risk in the sense the FOMC meeting has gone past us, so has the RBI credit policy. Okay, 14 isn't a problem, but once it crosses 15, that would be a worry. So previous all-time high is going to provide some resistance. There were two bearish caps, which we had earlier spoken about. Tamanna, both have been covered up. Now there's a bullish gap. Everything is hunky-dory. Metals are looking good. IT is fine. I think one should be stock-specific rather than market-specific. I just feel at around 25,078, we might, and plus the monthly expiry rollover. So it's going to be a bit more choppy, not as decent and as well behaved as the market has been today. Another bright spot is Bank Nifty is participating. Obviously, HDFC Bank has a lot to do with it. But if the Bank Nifty is participating and Reliance is waking up, that means I think there are good times ahead for the market, notwithstanding a few pulls and pressures.
Okay, so what would be your stock-specific calls then, Hemen? What would be your top picks this afternoon? Okay,
firstly, the buy call on Dalmia Bharat. It's overcoming the 55-day exponential moving average. The oscillators on the daily chart have given a crossover buy, higher tops, higher bottoms. Everything seems set for a further upside. So buy Dalmia at 1810, stop loss 1785, target 1860. The second stock is Mahindra & Mahindra Financial Services. Consolidation, breakout, not only daily, weekly, indicator support, moving averages. Everything seems set for an intermediate uptrend. I believe a few months down the line, this would be setting the stage for an all-time high also. So one can buy Mahindra & Mahindra Financial Services at 315, stop loss 300, target 345. Tamanna.
All right, but let's take it to the top buzzer of the day. Zydus Life under pressure. It announced the buying of a 50% stake in Sterling Biotech. Varsha joins us with more details on the deal as well as what's keeping the stock 6% lower in trade.
Well, thanks, Hersh, for that. So, yes, Zydus, there's a pressure in the stock. Now, this is because analysts are questioning the high-cost Sterling Biotech purchase. So, let's first look out what's the deal. So, they are acquiring 50% stake in Sterling Biotech from Perfect Day. The acquisition will lead to Sterling Biotech becoming a 50-50 joint venture between Zydus and Perfect Day. The newly formed JV is aiming to establish a manufacturing facility dedicated to producing fermented non-animal protein products. products. Now the cost of acquisition is at almost 550 crore for 50% stake. Now why we are seeing pressure on the stock is, one is given the new objective of the entity to produce animal free product, the company states that a strategic review will be undertaken. This means that there may be they may divest a part of the existing business. Sterling Biotech's existing business consists of gelatins and APIs. If you see FY24 revenue stands at around 450 crore. Now the other thing is Nomura says that the SBL is valued at 70% premium at around 1100 crore compared to the valuation of 640 crore paid under IBC by Perfect Day in December 2022. Now acquisition according to Nomura is not likely to be earnings accretive in near term, and SBL's current profitability is weak given its weak revenue growth and low EBITDA margin. Also the impact of strategic objective is unlikely to be material in the near term according to the brokerage firm. Also the other trigger that led to fall in the stock is the new competition impact. Now Teva has launched a generic version of a product which is used to treat certain bowel disease. Now Zydus over the years have enjoyed the benefit of practical exclusivity in absence of any competition, and the product seems to have contributed around 140 to 160 million US dollars of sales in FY24. With the launch of Teva generic, Citi believes that the sales of the product may fall to 40 to 50% from the current level. So these are the main two reasons we are seeing the pressure on the stock.
Thank you for that, Varsha. Very well explained why the Zydus stock is one of the top losers today in trade, nearly 6% down. Avinash Gorakshakar joins us now in the conversation. He is Director, Research, Profit Mart Securities. Avinash, very good afternoon to you. Let's start with your view on the markets. 25,000 steady and strong. This next up move, do you think is going to come from the likes of an HDFC and an RIL? Because remember, the broader markets have not participated with as much enthusiasm.
Yeah, I think Tamanna, Reliance, I think will be in focus, because of the AGM. I think a lot of news expectations that possibly some big announcements could be made on the divestment of the retail business. But I think clearly, I think the large caps have yet not participated in a very big way. So I think you're right, like the banks, the capital goods sector stocks, cement stocks. I think we have been telling our clients to actually buy on declines in this kind of market. And I think the index is finally a composition of, around 30 scrapes or 50 scrapes. But I would believe that, even as of now, having said this, that the broader market will offer good amount of opportunities for, investors who have a reasonably high risk appetite. So I think just looking at the index is not going to make money. You have to get into good companies which have shown good quarterly Q1 numbers, good management commentaries. And I think that would be a better way to actually, invest in this market. So I think index apart, we continue to be very positive on the broader market, and some few large caps where we feel, specifically from the capital goods and cement sectors, where some value could be generated over the next, say, 12, 15 months.
Okay. Hemin, let me come to you. A couple of quick sectors I want to flag off. Of course, the Nifty IT has held up very, very well through the day today. But Nifty Realty, if we can have the graph from the bottom intraday, it's up 1.4% from literally the flat line. So it's virtually done or gotten much, much better through the day, gotten stronger through the day, good strength. Nifty Oil and Gas, if we can, or Energy, if we can pull that one up as well, 1.3% again from the bottom, it's done fairly well. Hemin, with regard to a couple of these sectors, they've shown resilience. Anything on your radar?
Yeah, as far as the Nifty Realty index that you were mentioning, it's had a phenomenal move, but one would say that we've had a 8 to 10 year consolidation before we commenced a longer term uptrend. 360 to 1150. It's taken a breather, but it's a correction within a bull market. So if you have a 2 year plus point of view as your outlook, this is going to go up further. It might take some more time, go up. Like you said, currently it's given upward key reversal. There is support, oversold situation, indicators turning positive. Everything seems to suggest that we're on the cusp of a bounce. This bounce could get converted into an uptrend, assuming it does a higher bottom, which is a possibility. So setup is positive, no doubt. But the bigger picture is even more positive. And the oil and gas that you're talking about, 3 oil and gas stocks, HPVP, IOC, all look good. IOC remains a screaming buy. All of them are going to make fresh all-time highs. Further upside over the next 3 months or next 4 to 6 months seems like a very distinct possibility. So I believe that would have positive repercussions on the index itself also, Hersh.
Okay, since we're talking about the energy sector, and of course in focus is NTPC and ONGC on watch, Mehika joins us to talk about why we've seen a rally, a pretty strong rally in both stocks today. Yes, Mehika?
Yeah. I'll start off with NTPC first. The stock is mainly buzzing on the optimism for the solar module industry. Now, there have been many factors as well as domestic as well as shifting global dynamics that have increased the outlook for the new capacities that are coming on stream. Now, we also had a Bernstein note that maintained overweight rating at a 440 rupees target, which implies a 9.4% upside from Friday's close. Now, what the anticipation of new capacities coming on stream does is NTPC historically has been commissioning its solar projects slower than expected due to the demand constraints of solar modules, or commonly known as solar panels, which is a key component for the solar projects. But with new capacities coming in, these constraints would not be a problem anymore over the next couple of years. And then we have ONGC and other companies hit a milestone when it comes to their Block KG98/2 oil and gas basin. They've started production from the 5th oil well from the block, and they've also started transport as well as sales of the associated gas. The company has also given an update regarding the whole block itself. It's commenced oil production from 4 out of 13 wells, and as well as gas production advancing in 3 out of 7 wells. And this basin is something that is a key driver of growth for the company. Why the production is important is because higher production from the block is a positive for ONGC because their revenue realizations are capped at $75 per barrel. So the only way that they can, have higher net revenues and thereby net profits is when they have higher production coming on stream.
All right, thank you for that, Mehika. Hemendra, let's get your view on ONGC and NTPC. This afternoon also still going strong.
ONGC, the bigger picture remains unequivocally bullish, Tamanna. If you take once again a slightly longer term point of view, we're at 328. Stock is going to 450 and maybe even 500 in the next 12 or maybe even 18 months. So the setup remains quite positive for ONGC. And the other stock you mentioned?
NTPC. I mean NTPC.
Okay. NTPC looks good, needs a closing above 426. Setup is positive. We have been in an uptrend for the last 4 years, and that picture still doesn't change. So looks good. I would prefer ONGC a bit more simply because it has corrected a bit, Tamanna. I'm not saying too much, but it's consolidated. I mean, the stock consolidates a bit. It gives you that much more confidence in the sense. The risk reward ratio is more comfortable. We have something to play on. If it's an all-time high, hitting highs every day, it's becomes difficult to measure how much it would stop, when, what. So I would prefer ONGC if I were to take a fresh trade.
What about Hindalco? Any view there? Himain, one of the top gainers today on the Nifty.
I think it's worth a buy. 715 is the high, but I believe we are heading towards 750 and more. It looks quite promising, Tamanna. 3 months of a consolidation. Sorry, I'd say 4th month because this month is almost coming to an end. 4 months of a consolidation. 800 coming, Tamanna.
Okay, let me take it to you, Avinash. With regard to energy, power, any stocks, any preferences you have within the space?
I think we continue to be positive on the power generators. I think we are positive on stocks like, Tata Power. For that reason, even, ancillary, power transmission companies like AEC International, very strong order book. In fact, today the company reported a new fresh order of almost 800 odd crores. So I think, power distribution, power ancillaries, I would believe that the entire, space looks interesting, provided, the investor has a slightly medium term to long term view. We believe that both FY25 and 26 are going to be very strong years. And most importantly, companies which are running a large order book, definitely would enjoy good visibility in both top line as well as profitability. So AEC remains our top pick, and obviously Tata Power from the power generating space.
Just out of curiosity, Avinash, not constructive on NTPC, valuations slightly more reasonable, broadly?
Yeah, I think NTPC, according to us, I think definitely is a good long-term opportunity. But I think it's been a very slow mover. I think probably a year the time frame would possibly be little more than 12 to 18 months, considering the fact that the stock has not moved up quite significantly in a very reasonable time frame. So here we would be constructive on the company, provided the investor is willing to take a slightly more longer term call. But yes, NTPC also could qualify the bet as one of the key power generators.
Okay. Anything specific with regard to OMCs, Avinash, before I move on? Because I want to try and cover that theme as well. OMCs, whether upstream, downstream, your views on this entire oil and gas space, how would you play it?
I think we are positive on the oil and gas space. We like both the gas companies as well as the oil marketing companies. In fact, in the near term, oil marketing companies could be sentimentally hit due to the recent developments in Iran and Israel. But I think clearly looking at the kind of traction both on the automotive and the airline kind of segments, which are the largest consumers of oil and gas. So I think that definitely looks quite interesting. Somebody who's got a contra view can obviously look at BPCL, HPCL. But I think from within the gas, stocks, I think we look at Mahanagar Gas, or for that reason, Gujarat Gas. These companies, I think, should do better because not only have prices improved, but even the throughput has improved. And I think to a large extent, I think the government has also pushed these companies in ensuring that they get better incentives. So I think MGL and Gujarat Gas could be good, reasonable bets, for a medium to long-term horizon. And from the OMC space, we would believe that HPCL and BPCL, and of course, if you could add, even IOC looks interesting. But yes, I think it all depends on how the crude prices move up. If the crude price does not get jolted, in a very big way, then I think these companies would definitely do better in the coming quarters.
Okay, quick update there on 197, and that stock has been taking a tumble for some time now. But breaking news on NDTV Profit, as you can see, that the founder Vijay Shekhar Sharma and the entire board of directors from 2021 have got a show cause notice from SEBI. The notice pertains to non-compliance with promoter classification norms during the IPO. Now, we'll get in a more detailed update in just a few minutes from now, but suffice to say, actually, it's a bit of a recovery from the stock's lows. 505 was the low of the day at 523 right now. Once again, a company that seemed like there was light at the end of the tunnel, facing regulatory action again, and that seems to be the bugbear for this company time and again. So non-compliance with promoter classification norms during the IPO process seems to be the concern that SEBI has immediately. And while we wait for more details, just a quick view from Avinash on 197. So after this whole Paytm insider sale to Zomato, etc., 197 had benefited quite a bit. It was seen as in perhaps the worst is over for the company. But I suppose it would be fair to say that regulatory overhang continues.
Yeah, exactly. I think, Tamanna, regulatory overhang is a very big kind of a issue for Paytm. And I think after the RBI hangover now, I think this SEBI order is another thing which the markets would watch very closely. Because, I think any negative surprise which comes in is actually going to be a spanner in the works, and I think that is going to actually halt any re-rating here, especially after the Zomato deal. There were expectations that some relief could come in for Paytm, but I think now with this order from SEBI, I think we'll have to wait and watch how the management responds. What's the new development here? But I think this is definitely a big negative surprise. I think the markets would obviously take this quite negative.
Okay. Hemin, let me come to you on Paytm. Just with regard to how it's looking, would you wager a trade at this point?
Yeah, I would wager a trade at 500 and 485. I'd take a contra call. I was bullish, I'm bullish. This is a temporary hiatus, technically speaking. Fundamentally, Avinash would obviously know much better. So I'd say it's a correction within a uptrend, Hersh.
All right. Quick word on Bansal Wires, another stock that's buzzing. That's after a positive note from Investec. Actually, they've initiated coverage with a buy rating. Puneet, give us the details.
Thanks for that. So, Bansal Wires is a very recently listed company. It's a steel wire manufacturer. operates under, the three segments of stainless steel as well as steel wires. And what's interesting is that, now finally, it's the first brokerage update on it by Investec. They see a target price of 440 rupees per share, which is a 25% upside from the previous close. Now, Investec sees that, Bansal has created a niche for itself in the steel as well as the stainless steel wire, where it is the second highest by volume maker. It's also reduced the cost over the last couple of years because of its scale as well as automation and high utilization level in its current plants. They also say that, over the last 10 years, the company has consistently clocked a 20% revenue CAGR over the past decade, and that's a really strong positive growth momentum going forward as well. They have mentioned that, the new Dadri plant is, having high level of automation and expects that there'll be 40% EBITDA CAGR over the next 3 years because of this plant. And with higher utilization coming in now, that will be one of the main things to look out for. They also said that the company is undertaking two key initiatives. The first one's foraying into steel cords, a space that has not been present in before, but will help margins. And the second one's backward integrating is stainless steel cords. That's another thing that they're positive on. We did speak to the management over the last weekend, and they see that the current capacity of 2.6 lakh million tons will be increased to 6 lakh million tons, and that's one of the main positives. But overall, for this report, the first such positive view coming in on Bansal Wires. Only such player in India. They only have very strong, some competition from Rajratan, but overall a positive brokerage review coming in. Back to you.
Thanks for that, Puneet. Avinash, let me come straight to you. Bansal Wires on your radar at all?
I think my guess is, Hersh, this definitely is an interesting bet, considering the fact that they have market leadership and high market presence in these kind of value-added products. My sense is that even at these valuations, looking at the kind of buoyancy in the wire market, this is one company where I think the stock has got a reasonably good risk-reward potential if one were to take the next 12 to 15 months. Our sense is that FY25 looks quite interesting, and hopefully margins get better. And of course, it is combined with a good volume push, then I think you could see a reasonable amount of re-rating even happening from the current odd levels. But yes, I think clearly, today's move has been quite sharp. So maybe a slightly a dip in the stock could provide a good entry point for investors going forward.
Okay. Very quick break. A lot of news to unpack on the other side. We will get more details from my colleague Rishabh Bhatnagar, who has that story on Vijay Shekhar Sharma after the break. Tell you what's happening with 197 and get also what your strategy should be in this market. While we go into the break, listen in to this view coming in from Mark Matthews of Julius Baer, who spoke to us this morning and says that RBI as well as other central banks, in his view, will follow suit after the Fed cuts rates.
I imagine the RBI will follow the Fed and many other central banks as well, by the way. But to come back to my earlier point, the relative attraction of India is, there are two sides of the coin. One is that India is doing very well. I don't see that changing. But the other side is that the U.S. is doing very well, and you need to see the U.S. do less well. I don't mean go into a bear market, but I just mean stop being the really incredible bull market that it has been for the last 10 plus years, for interest to broaden out to countries like India. And I think what I'm trying to say is I don't really see the case for the U.S. Bull market ending anytime soon. And as long as that is the case, that the bull market in the U.S. is intact, then you are not probably going to see a lot of investors trying to go out to other parts of the world to seek better returns. I mean, why should they?
All right, let's talk about the big story this hour. Sources tell your channel that SEBI has sent a show cause notice to founder Vijay Shekhar Sharma and all the board of directors from 2021 for classification of promoters, incorrect classification of promoters. Rishabh is joining us with more on the story. Rishabh, what really is the concern that SEBI has?
Right, Tamanna, this is regarding a show cause notice that SEBI has delivered to Paytm's founder Vijay Shekhar Sharma, as well as a few board directors that has served during the company's IPO process way back in 2021. So at least 3 years old this issue is. Now the issue is regarding Vijay Shekhar Sharma's classification as a promoter. So during the IPO, he was not listed as a promoter, but rather as a non-retiring director. This was also highlighted by another firm called Institutional Investor Advisory Services, a prominent advisory services firm. And they had also found that the fact that VSS is not classified as a promoter is a sort of a regulatory loophole. And that despite his aggregate shareholding being higher, he does not hold the responsibilities that a promoter should. And I believe these current set of
Once again,
notices
Rishabh, what was he
are
classified as in 2021, if not as a promoter? What did they classify
He was
VSS
a
as?
non-retiring director on Paytm's board at the time.
And so the bone of contention, if I understand, is that since he was not classified as a promoter, he did not carry as much fiduciary responsibility as he should have with the kind of share that he had.
That's right, Tamanna. And from what we're also hearing, as these notices have been served, Paytm has not put them out on the exchanges yet. So we should have some sort of word on that as well going ahead.
Thank you for that, Rishabh Bhatnagar, there with all of those details on the SEBI notice which has come to Paytm, stock down about 5%. And Hersh, you know, this is a company that you've been tracking very closely. Yep. Fundamentally, right now, they are in that phase where they're grasping for a business, figuring out what their business will really be after the RBI crackdown a few months ago. Some relief with this Paytm insider deal, but apart from that, this is just another blow, because if you're questioning corporate governance standards at the very top, then that's definitely not something investors like.
Absolutely, Tamanna. It's always going to weigh on an investor's mind. At least if I were an investor, would weigh on my mind, because if you're consistently being caught or you've been caught off guard.
Questioned, I would say.
Questioned with regard whether it's RBI, whether it's SEBI, with regard to some of these simple corporate governance issues, then you are not going to have the best time where investors, or rather investor preference is concerned. Also, the other piece is that Vijay Shekhar Sharma had diluted some part of his stake as part of the IPO as well. If I recall, it was roughly 400 crore is what he himself had diluted as part of the IPO, which is roughly 0.4% of Paytm's market cap, roughly at that point. So, therefore, maybe that also starts getting called into question, because he also in some form benefited, if I may say so, from that IPO. And that will weigh in on investor minds as well. Till they don't sort their house out, I think there will be some amount of a headwind of sorts that Paytm will continue to face. And it's not been a one-time issue, it's been recurring. And that's where I think the concerns for investors has
you know, it's just a fascinating sort of story of going from the top of the ladder in terms of glory, the startup space, new product, right to this. So, I mean, I really don't know what's coming next for Vijay Shekhar Sharma and for Paytm. Stock now at 527. All right, F&O cues. Let's focus on what's happening this Monday afternoon when the Nifty is standing steady at 25,000. Agam joining us for more on that.
Oh, well, that is in fact the big highlight for the day. Nifty standing at 25,000, and that also means that there's plenty of traction potentially towards the upside is what we're expecting it to be. As you can see, there's very little change in open interest and perhaps on expected lines, because at this point in time, we aren't exactly sure as to where markets want to go. Well, given the fact that we are closing about 25,000 thereabout, it's still considered a positive because we're very close to the life highs. As far as the bank Nifty is concerned, again, a very little change in open interest and about a 0.5% up move as far as your index goes. Again, we're coming off from day's highs. But when it comes to the options market, this becomes interesting because at the moment we've seen a lot of activity shift from the 24,800 mark to the 25,000 mark. The question now is that are we going to expect consolidation around 25,000? On the higher end, there has been a whittling down of a lot of writing as far as calls are concerned, which also tells you that not everyone would be looking forward to be selling any of these calls with the expectation that the markets could potentially go higher from current market levels. And moving on to stocks, again, it's been a fairly mixed day of trade, but it does seem like the top gainers on the open interest are all towards an up move. So fresh longs for Tata Communications, TCS, NTPC, Alchem Laboratories, as well as L&T. And stocks which are seeing unwinding as well. We're looking at a little bit of an up move there. SAIL, I guess, in this case stands out because that's the one where the underlying is moving substantially higher by around 4.5% with a near 20% decline in open interest. So all in all, a good day of trade for the markets. And the question is that can we sustain at these levels?
All right, Agam, what also kind of stood out for me, especially among the open interest gainers, 3 of those 5 to 6 top gainers which Agam flagged off were part of the Nifty 50. So essentially suggesting how strong the market is, especially on the large cap side of things. TCS, NTPC, L&T, all 3 of those standing out. Thanks so much for that, Agam. But Avinash, before I come to you, let me go to Himen. Himen, the index itself has done very, very well for itself in trade today. You expect the strength to sustain? And if so, what will actually carry the index? And will we see 26,000 this time around?
Okay, 26,000 is slightly far away, Hersh, but I would go with your point of view. Sometime down the line in the next couple of months, I think that is a possibility. Currently, there's a bullish gap which is formed today, Hersh. Expiry week, I believe there would be a bout of volatility. I don't think it's going to be a smooth. It never is. Normally, it never is. So I believe a small cool off, especially when we are close to its all-time high of 25,078. So I believe a small dip could be there. But yeah, 25,078 gets taken out. We were in this range between 23,900 and 25,000 or so, Hersh. Now, about 25,078. Right now, what seems like a pipe dream, 25,800 to 26,000 probably seems to be on the horizon because, and okay, what will take it there? I believe it's going to be Reliance and the Bank Nifty. I am slowly getting positive on the Bank Nifty. It's like HDFC Bank was holding it back, was sort of holding it back, and maybe even Kotak, while ICICI was good. State Bank and Axis Bank have taken a breather, but if HDFC Bank does what it's been promising to do for ages, I think Bank Nifty can surprise big time in the next couple of months. Hersh.
Right, but Himen, sorry, just to try and complete this point, no assistance from the PSU Bank. Do you expect some unwinding there, maybe latter half of this week?
Okay, the PSU banks are, frankly speaking, in hibernation. This is 1, 2, 3, 4, 5. This is the 6th month of PSU banks on a hiatus, so to speak, Hersh. And the most obvious one, sorry to digress just a bit, PNB. Now, PNB is corrected for 5-6 months. Now, the stock is going to go to 150 plus in the next 6 months. That seems, or maybe next 8 months. Very, very strong possibility. Now, this is what exactly how, you mentioned the PSU bank indexes, Nifty PSU bank index is playing out. So I think led by State Bank, everything is taking a breather and a prolonged, protracted breather, I may say. So yes, like you're saying, some more sell-off, yes, because if you look at the Nifty PSU Bank Index, it's on the verge of, it's almost at the day's low. 1, 2, 3, 4, 5, 6 days up. Some more pressure. So I would say, yeah, near-term pressure and frankly speaking, non-trending, negative overhang, corrective bias, rounding top, everything seems to suggest some more time and price consolidation, Hersh.
Right. Let me come to Avinash. Avinash, some of these life insurers have been in focus last week. They've been buzzing as well, right? Maybe eclipsed by some other, news, but nonetheless, they've done fairly well for themselves. In terms of valuations, do you see them at an attractive value? Because there's just so much commentary around strong growth, even though margins may get trimmed a little bit, but growth extremely strong.
Yeah, I think Hersh, the life insurance players should do remarkably well because, post-COVID now, I think volumes have picked up, demand has stabilized. And I think, clearly in terms of the penetration and the reach, private sector companies like SDFC Life, SBI Life, I think we have been, advising our clients to actually accumulate at lower levels. Even at the current odd levels, if one were to take positions in these companies, I think one has to take a slightly longer term call, because most of these companies, quite frankly, Hersh, cannot be evaluated on a quarter to quarter basis because this business has a very strong runway for growth. So at least over the next, say, 1 to 2 years, if one were to add positions and look at them as strong portfolio candidates, I think in terms of the financialization of Indian savings and the kind of insurance market in India, I think there's a lot of, steam left here. But yes, I think most of these stocks are typically portfolio stocks. We have not been recommending these stocks for the short term, but longer term, yes, SDFC Life, SBI Life looks to be pretty interesting.
All right, let's switch focus. KC International in focus today. Order win stock is, up and alive, doing well. It was up much more, but we've seen some of those gains shaved off. But Anushi is here. How big is this 1,000 crore odd order win for the company? Anushi, break it down for us.
Hey Harsh, so as you mentioned that the company was in focus on the back of the 1,079 order crore that we are looking at. It saw 9.5% of an intraday high. From there on, it has cooled off from those levels, currently about 2 to 3% up in trade. Now this 1,079 crore order that we are looking at comes from the two of their business segments. One is the transmission distribution segments, and they've won orders across India, Middle East and America for this one, while the other one comes for their cable business, again both from the Indian side as well as the overseas business segment. So with this order, 1,079 crore order, the year to date order intake stands at about 8,700 crore, which compared to last year records about a 60% growth. So again, if you look at the company's target in order inflow for the year, that stands at about 25,000 crore. So this with this order, they've achieved up to 34.8 crore of their order inflow in the August month of FY25 of fiscal year FY25 itself. But again, just a roundup on how the company has been doing and its outlook going forward. If you look at KC's numbers, so the revenue was about 6.3% up. This is as against its guidance of about 15% growth that it targets for FY25. Of course, Q1 was muted on the account of general elections as we speak. Even if you look at the EBITDA saw about a 10.6% growth, while margins have more or less remained in a similar range over the last couple of quarters at the 6% level that we are looking at. Net profit, however, was about 88 crore as compared to 42 crore last year. But on the outlook going forward, as we speak, that they're targeting 15% growth, while margins are expected to be 7.5% in FY25 and 8.5% to 9% in 26, and they're conducting a capex of up to 350 crore in FY25 itself. So strong outlook going forward for the business, and again, it would be FY25 would remain in a watch out in terms of their guidance.
Okay. Quick check on KEC. Meanwhile, something that Hersh just pointed out, Aarti Drugs has approved a buyback at 900 rupees a share. The stock price is 586 right now. Just had a huge jump up last few seconds. There you go. 900 rupees a share. Buyback for a stock which was in the mid 500s. I mean, I don't know. Avinash, any quick take, hot take?
56% promoter ownership.
Tamanna, I think this is a very attractive buyback. I think most of the shareholders would opt for this buyback. I think clearly, this budget has made buybacks a little more expensive for companies going forward. And I think that's the key reason why we are seeing many companies opting for buybacks. But I think this price is definitely very attractive. I think 586 is the current price, and you're getting a buyback price of 900. I think how much the company buys, whether it's a tender-based or a market-based kind of buyback, one will have to watch out for. But yes, if it's a tender-based, I think buyback, it would definitely evoke a larger interest from the shareholders.
Insane rally there on Aarti Drugs after that price has come out. I don't know, Heyman, if you have anything to add. I don't think the charts are making any sense after that buyback price there. But anyhow, if you have a take.
Well, you're actually right. Not much of sense, but a breakout is coming in above 580, and this is the highest level for Aarti Drugs, Tamanna, since September 23. So the reason is obviously the buyback price, but I believe this is a positive. We are going to 620.
5,000 crore in market cap, trading at roughly 40 times, and you have promoter ownership at 56% odd. Clearly doing well for itself, Aarti Drugs, on the back of that buyback announcement, and I'm sure shareholders will benefit because a clear 50% from here in terms of buyback price. Well, very, very strong. 8% higher now as we speak. But let's switch focus. Nifty reclaims 25, of course, today. Whether it continues to hold or does not will possibly be determined by close today. Hopefully, we hold the 25K. But here's Dinshaw Irani of Helios Capital, his view on what's next for the index and markets going forward. Meanwhile, we also spoke with Ruchir Sharma, who remains bullish on the India growth story. Let's hear it from these two big market voices.
I don't think the rate cut is going to be exciting enough for us per se. By the way, if you go back in history, normally the rate cuts are followed by, the first rate cut. You don't see much of euphoria because already up to that rate cut, the euphoria has already been built up. So global markets are, I think, more or less discounting that. Given the domestic flows that you asked about, the foreign flows into India, I don't think there's going to happen in a rush, given that the way the capital gains were given out. The increase happened in July. You must have noticed that after that, only the FIS selling was happening. Prior to that, they were actually buyers every day. But from here on, they've been selling, except on days where there's this massive insider offerings, which they have lapped up with that discount coming through. So I don't see that happening in a big way. Maybe once the aggressive cuts start off, that's when you'll see the flows coming back into India.
There's no doubt that India is on the right economic trajectory, right? And that's in terms of the fact that if you look at even productivity growth in India, over the last few years in particular, it's done pretty well. Of course, you can say that it's done almost too well because we haven't created as much employment. And, when you create high economic growth with low employment, it is naturally done because of high productivity, but it leads to other consequences as well. So India in general, is moving in the right direction. India is still sort of moving in the direction of becoming more economically free. And we know that ever since we have become a more market-oriented, capitalist type of economy, generally over the last 30 to 40 years, India has made faster economic progress. The point I make in the book as well is that were India to move even faster down that path of adopting more economic freedom, we could even achieve even higher growth rates. Because we are still, at the end of the day, if you look at the index of economic freedom or so, we are still in the hundreds.
Bottom quartile.
Yeah, we are, in terms of in the bottom third at least, we still are a long way away from becoming a truly economically free country. So and China, remember, even though it's a communist nation, became much more economically free by giving its people economic freedom. So that's one of the big paradoxes that we have to deal with, that we gave our people lots of political freedom, but we constricted their economic freedom. We started giving people more economic freedom from the 1990s.
You can't win elections.
All right, you must catch that conversation. It's a fascinating one. It's, of course, on all our social media platforms, and you'll see it on NDTV Profit as well. Coming back to the last bit of markets, and we're looking like we're set to close above the 25,000 mark. comfortably, actually, 25.012. Well, let's see what happens in the next few minutes or so. But Hemin, what would be your BTST calls?
It would have been Aarti Drugs, but Aarti's already gone to 6:30, Tamanna.
Okay.
So I would
in the last couple of minutes, it's gone out of reach.
Completely berserk. So I have a feeling that something on the metal space looks interesting, Tamanna. I think something like a Jindal steel and bar, that looks good. So maybe one can do a BTST on Jindal steel and bar, Tamanna.
Avinash, what about you? What would be your top calls for tomorrow's trade? Do you see the IT rally continuing? I mean, apart from Aarti Drugs, first of all, would you say someone should go out and buy Aarti Drugs if it's available? Last few minutes left and in trade tomorrow?
I think, Tamanna, the fact of the matter is what Hemant said is right, that this is pure momentum buying. I think people are now grabbing the share in the hope that, even before the buyback, some trading profit is done. So I think if you're lucky to get it, fine. But otherwise, I know it's very difficult now since the news is out. As far as, investment calls are concerned, we like a company called Zaggle Prepaid. We believe that this has got a differentiated business model, and maybe it's not a call for the day. But if one were to take the next 6 to 12 months, they have been adding customers very aggressively. In 24 March, last year, they added 620 customers. They have a now clientele of almost 3,000 customers. And clearly, the kind of positioning this company has, it's a mix of product and financial solutions. And numbers have been pretty strong in the first quarter, a profit of 22 crores compared to just 8 crores in quarter one last year. So I think my sense is that we could see levels of 450, 440, over the next 6 to 12 months. This is a stock where I think a reasonably good, upside is possible. I think you need to just hold on for the next, 6 to 12 months.
Okay, and Avinash, just from a numbers perspective, as Zaggle scales, because it's fintech of sorts, fintech SaaS, as it scales, do you believe that the ceiling is, is literally to infinity at the moment?
Yeah, exactly. I think Hersh,
sorry. I asked this from a context that you've given us 6 to 12 month view. So is it my question being that is it a longer term buy as well? Is that something that you're finding attractive even from a longer term buy valuations?
Yeah, exactly. I think, the next 6 to 12 months our fair value is around 440, 450. But I think you're right. The propensity to increase volume and scale up the business is significant. And in fact, now the numbers have started getting reflected in the quarterly numbers also. That's why I mentioned in quarter one, you got a profit of 22 crores compared to just 8 crores in quarter one. Number of clients have also started adding. And this is like a large and a very strong annuity kind of business model. So I think, yes, longer term also somebody, if one were to take a call for the next, say, 18 to 24 months, I think definitely this is going to be an interesting bet, Hersh.
And, we have an interesting note in front of me. In fact, Capacit Infra Projects, Julius Baer has a buy, target price 450. Infra has, of course, been a very, very strong play. Execution in Q1 was slightly on the slower side of things, Avinash. But likely the unwind will also be equally strong, given that elections are now firmly behind us, Q2, Q3, Q4. Capacit, any other play that you feel within the infra pack which stands out for you?
I think, my guess is that companies which are sitting on reasonably good order book, I think PSP projects, from Ahmedabad, they have a large order book. They have very marquee kind of, projects which are coming up. So my sense is that, one has to stay in the saddle for these companies. The third and the fourth quarter typically is supposed to be the best quarter for these companies. And I think most importantly, new orders are coming in. So I would believe that, PSP projects, which is a quality play and has got a very large order book of almost roughly about 1,800 crores, has also got a very reasonably good revenue visibility over the next, say, 12 to 18 months. So I think, there are lots of stocks where in this sector, the construction and the EPC segment, I think things are moving out pretty smoothly. And I think as long as new orders come in, Hersh, I think you could see a lot of re-rating happening here. But yes, you need to be staying invested here for a reasonably medium to long-term time frame.
Avinash, let's get your view on metals. Good turnaround today. Hindalco, of course, we spoke about briefly, though interested to know what you think about it on the charts. But the entire story about interest rate cuts, increasing demand, some China fears receding, prices in India stabilizing. Do you see this carrying through? And then what would be your top picks within the metal pack?
No, I think, metals have definitely bounced back. And you're right in saying that if interest cut comes in, demand from China perks up, then I think you have a very solid foundation for companies, like Hindalco, Tata Steel, Vedanta. I would believe that, all these companies are trading at historical lows. And I think clearly, from their peak valuations, of course. And I think, these companies have got very large geographical kind of reach, both within India and abroad. So I think clearly China is going to be the joker in the pack. If we get some clear indication as that demand is going to perk up from China, because for a very long market, China has not been a very active player in the metal market. So I think we'll have to wait for the September quarter, Tamanna. But I think clearly Tata Steel, Vedanta, I think looks pretty interesting, apart from Hindalco, which has already seen a good move. So we'll have to take a small bet in the sense that somebody who's a contra investor can actually bet now and preempt, the quarterly numbers. Once the quarterly numbers are out, management commentaries are out, I think we could see a better run, going forward.
All right. Thank you so much, Avinash and Hemain, for joining us today as we wrap up what is looking like an interesting day. It looks like we might not close above 25,000. Minute and a half, less of that left to go. Let's see. It's going to be a race to stay about 25,000 as we close. 25006 as I speak, and we'll see what happens in the next few minutes. Let's pull up the mid-cap and the intraday of the mid-cap, because interesting, you've seen a bit of an up move there. If you pull up the intraday chart, a bit of an improvement in the mid-cap index just in the last 20 minutes or so. Let's pull up the small cap index as well into chart to show you what's happening there, and the bank Nifty, because as we wind down to close, these are some of the clear themes that you will be seeing. Nothing much on the small cap. In fact, that's sliding a bit. But let's pull up the bank Nifty just for a second and see what's happening there. Bank Nifty, okay, not too bad, about 0.5% up today. But the story of the day has been IT and metal stocks. And just let's pull up the sectoral indices for you before we go into the heat map, etc., and see where exactly we're closing at. I mean, the rally in metal stocks has been just astonishing today, and we thought it's going to be a day for only IT companies or largely for IT companies, but metal stocks have roared back. And one of the reasons is that an indication of a rate cut, and perhaps more aggressive than what was expected earlier, means that you will see demand increasing the world over. Maybe China also stabilizes. Indian rates are also looking fairly good. So that's the metal story. Realty is rebounded after quite a few sessions. So Nifty Realty also up there, Nifty IT. In fact, if you look at all the sectoral indices, the only ones in the red, and that were not really terribly in the red, are Nifty Media, Nifty PSU Banks, 0.5% down there. Let's pull up the heat map as we get into the close. And markets have closed today. Have we managed to close above 25,000? Just about 25,010. So 25,010 is the closing we've seen, 187 points up. HCL Tech climbs the charts to the top. Over there, 4.5% up. Hindalco, NTPC, so that theme very clearly there. ONGC, because of a number of factors, crude prices are looking like they will trend upwards, in part because of what's happening geopolitically. I don't know if any of you saw the horrific shots of a drone flying into a skyscraper in Russia. I mean, it's just astonishing. Of course, what's happening with Hezbollah and Israel, also keeping crude on boil. Good for ONGC though. Tech Mahindra up there, LTI Mindtree, so those stories sort of continue. Apollo Hospitals, Hero Moto, the ones on the loser list have stayed there through most of the day. Just Nifty contributors very, very quickly before we pull up the top gainers and losers in the Nifty 500. Nifty contributors, HDFC Bank roaring there. HCL Tech has seen a sharp up move, ICICI Bank as well. So it's private banks, tech, and of course Reliance lending a shoulder in a week where the AGM is due. So a lot of big announcements being watched there. But let's look at the top gainers and losers on the broader markets as well. JM Financial having a very, very good day. GSPL. But, Aarti Drugs is the story of this afternoon. I don't know if you can quickly just pull up the intraday chart of Aarti Drugs and then we come back to this, because astonishing. The news flash on our screens that buyback at 900 rupees. Stock closes at 632. Still a huge upside there. The day's low was 556. So the buyback is at $900. Expect that upswing to continue and trade tomorrow as well. Just very quickly, back to that chart of the top gainers and losers, and then we wrap. Zydus Life there, their Sterling Biotech deal has not impressed the street. Paytm has got a show cause notice. Vijay Shekhar Sharma from SEBI, so more regulatory hurdles there. So those were some of the big stories we're seeing today. But really, that's time to wrap on India Market Close. So from Hersh and me and the team that put the show together, thank you so much for joining us. Stay tuned. A lot more coming up on the other side.
Good morning and welcome to NDTV Profit. The big story we are tracking today, the stage appears to be set for the Fed to cut rates. Jerome Powell, the Fed chairman, has given a hint at the Jackson Hole speech. To take this conversation forward, we are being joined by Mark Matthews. He is from Julius Baer. We don't need any special introduction. He's a big global market expert. Mark, welcome to the show.
Thank you, Mowgli. Thanks for having me on.
Yeah, so the first question, let me quote from what he's saying. Fed Chair Jerome Powell said, "The time has come for policy to adjust." Is September 18 the time that he is referring to?
Yes, it is. The first rate hikes were way back in March of 22, and as you know, they raised rates by the fastest pretty much ever, from 0 to 5%, and they've been at 5% for quite a long time now. So using the labor market as an excuse, because the unemployment rate has been rising over the last few months, the Federal Reserve is now indicating that it will be cutting interest rates. And what's most interesting in the speech that Jerome Powell gave at Jackson Hole on Friday is that he did not use any of the language that his colleagues had been using, like methodical or gradual, to describe these impending rate cuts. In other words, he's inferring that they could be quite rapid.
Okay, so of course he mentioned about, I think it's a kind of a caveat being the central bank chief. He's saying timing and pace will depend on incoming data. Now, is incoming data good enough to go at an aggressive pace, or will it be measured?
I can't answer that question. We'll just have to see. But what I would say is that if you look closely at the unemployment numbers and why they have been rising, a lot of it is coming from new entrants joining the workforce who have not yet found jobs, so they are still classified as unemployed. But the fact that they want to come back in the labor market is a good sign. It shows they think there are jobs out there. So, for example, Challenger, which is an outplacement company, they run an index that tracks job cuts, people getting fired. And their most recent job cuts index for July showed only 26,000 people were fired compared to an average over the last 20 years of 63,000 per month. So I think that actually the labor market, it's debatable, quite debatable that the labor market is cooling, is getting softer. In fact, the rise in unemployment to me looks more driven by confidence in the economy and people coming back into the labor market.
Right. So do you think that the markets have already priced in a 25 basis point rate cut?
Oh, yes, very much so. If you look at any one of the markets that track the Fed funds rate, they're all implying very aggressive rate cuts going forward, which I must say as a house we disagree with. We do think that rates will come down. We are looking for the first cut in September. But we're not looking for 8 or 10 or something like that, which is what many of these markets are pricing in.
So which means that we can see at least 150 basis points cut over the next 6 to 9 months?
I think we're looking for around that range, yes. We're looking for a terminal rate of 3.25 for the Fed funds rate by the summer of 2026.
Okay, so if that is the case, how will funds shift now? Will they shift from geographies and different markets, or will they also shift among different asset classes?
There will be some shifting. I imagine that one of the more important ones is that a tremendous amount of money went into so-called money market funds, which invest in very short-dated treasuries and other very safe short-dated financial instruments. As rates were rising and as rates were high, that money that is in the money market funds will probably want to move into some of the longer dated fixed income, and that could be treasuries. It could also be investment grade corporate bonds, because the shorter dated ones will be repricing at lower yields going forward. And we've obviously seen weakness in the US dollar, which I think is reflecting the impending rate cut cycle. And typically a weaker dollar is good for markets outside the United States. And I was interested that the MSCI World Index made a new high on Friday. The S&P is a little bit below its previous high, but world markets are starting to rise as well, because obviously when the dollar goes down, it means the other currencies are going up, and that tends to attract fund flows. So there are lots of things that can happen. Gold is making new highs, as I'm sure you know. It's above $2,500 an ounce now. That would also be reflective of this impending decline in interest rates.
So from what I understand, from what you have been articulating, it will not be advantage equities, I guess. Only in the short term we'll see equities moving up. So because the markets have equity markets have already run up a lot.
Well, actually, we prefer equities ourselves because we think that the economy is still strong. And I must say there's a slight contradiction here between an impending rate cut cycle and a view that the economy is strong. But because most people would think, well, if you're cutting interest rates, that means that, the economy is going to get a lot weaker. I would point out that there have been in history different times when the Federal Reserve has cut interest rates to normalize rates, just to bring them down to a more appropriate level. And there weren't recessions, and that's what we think is going to happen this time. So if that's the case, then earnings growth will remain strong. It is strong, by the way. Earnings growth in the second quarter was over 10%. We think it will be over 10% this year. That's for the S&P 500, and again next year. So as much as fixed income should benefit and probably will benefit from falling interest rates, it doesn't mean that equities won't continue to rise.
Right. So you mentioned about dollar going down and therefore other currencies going up. If that's the case, do you think the yen carry trade will play out again?
I think it will. I think the difference between the two central banks' policy rates is ultimately what decides the dollar-yen rate. And even if the Federal Reserve cuts interest rates, we're looking for 4 rate cuts by March of next year, and by March of next year for the Bank of Japan to raise one more time, there'll still be a 400 basis point differential between the Federal Reserve's policy rate and the Bank of Japan's. And so that does make it interesting to borrow in yen and invest elsewhere.
Okay, so let me come back and sharpen my focus on India. In all this kind of dynamic shift that we are going to see over the next 6 to 9 months, do you think it will be advantage India, or will funds move out of India as foreign investors try to realign to the new rate regime?
I think much will depend on the trajectory of the U.S. stock market, because it's been, as you well know, such a very good market over the last 15 years that it's really crowded out almost every other market from the attention of global fund managers. I mean, why bother investing somewhere on the other side of the world that you know very little about if things are doing so very, very well at home in the companies that you do understand, like these big technology companies. So if the outlook for the big technology companies remains robust, and for the U.S. in general, and I would note that within the S&P 500 index, there are important sectors like the financials, like the real estate sector, which also broke to new highs last week. And that does not corroborate the idea that the U.S. economy is going to slow down anytime soon. So I guess what I'm trying to say is that things still look very good in the United States. And as long as they do, other countries will probably not garner that much interest from a global fund manager.
So you don't seem to be too positive about the India growth story, because India is the fastest and perhaps the only growing, strong growth economies of the world if we leave US out.
Well, your question, I think, was what would investors do if, and I answered by saying that I think the U.S. is still looking very good, so I don't think investors are going to become more interested in other countries. But we as a house have liked India for quite a while now. I personally think that it will be one of the rare markets in the world that will outperform the U.S. over the next 5 years. But I sit here in Singapore. I'm a little closer to it than people in Europe or the United States, and I spend more time looking at it because that's my job. So I can see the bright future. They don't spend as much time looking at it, and so I guess they haven't really invested that much in it for that reason.
So do you think India is not overvalued? Because there is a general impression that India is overvalued.
It is overvalued. It should come down a little bit from here. The earnings growth has decelerated from the mid-teens last year to around 6-7% in the most recent quarterly results, and on 25 times forward earnings, it's definitely more expensive than the average long-term forward price earnings multiple, which is 20 times. Yes, I think it is a bit overvalued, and I would like it to come down, but I don't know if it will because the domestic flows are still very strong.
Okay, so what will turn the story for India? Do you think RBI will follow Fed and cut the rates here as well, and will that make India a little more attractive?
I imagine the RBI will follow the Fed and many other central banks as well, by the way. But to come back to my earlier point, the relative attraction of India is there are two sides of the coin. One is that India is doing very well. I don't see that changing. But the other side is that the U.S. is doing very well, and you need to see the U.S. do less well. I don't mean go into a bear market, but I just mean stop being the really incredible bull market that it has been for the last 10 plus years, for interest to broaden out to countries like India. And I think what I'm trying to say is I don't really see the case for the U.S. Bull market ending anytime soon. And as long as that is the case, that the bull market in the U.S. is intact, then you are not probably going to see a lot of investors trying to go out to other parts of the world to seek better returns. I mean, why should they?
Right. Unless the election outcome or election results could play spoil sport. What's your view on how politics will play after the election results in the US?
Well, that's a good point, because a lot of things could happen. And one thing that could happen is that Kamala Harris could be president, but the Republicans could gain the Senate and keep the House of Representatives. And if the Republicans control both chambers of Congress, I think they will not be supportive of any spending bills from a Democrat White House, and that would slow the growth trajectory in the United States. And that might make the rest of the world more interesting from an equity perspective. But I would say that is not our base case scenario right now, although Mrs. Harris is in the lead, Vice President Harris, in the opinion polls. In fact, you must remember that in 2016, Hillary Clinton was vastly in the lead in the opinion polls at this time, and she lost to Donald Trump, and Biden was well ahead in the opinion polls in 2020. He just barely beat Trump by quite a small margin. So I would say a lot can happen. There are scenarios like the one I described with U.S. politics that would cause a deceleration in growth in the United States and make the rest of the world more appealing. So we'll have to wait and see which one plays out.
Great. We'll have to clearly wait and watch till the September 18th, where the rate cut is a kind of a given, and the election results. But the India story is still intact. Mark, thank you so much for joining us and taking our viewers through your thoughts and expert views.
Thank you.
Let's also get in Matt Orton of Raymond James Investment Management, who's joining us on the show right now. Matt, thanks for taking the time out and speaking to us here on NDTV Profit. Perhaps my questions are more or less similar in this case, Matt. Firstly, want to understand what you made of the Federal Reserve's chairman's commentary coming in over the weekend, and what sort of an implication could it potentially have when it comes to their rate decision on the September 18th? What's the way forward? How are you assessing this at the moment?
Good morning. And I think it was very constructive what we heard from Powell. I agree with what was said, that the stage has definitely been set. I think this was the clearest signal yet that we've received from Powell that rate cuts are going to start in September. And really the question that remains is how fast and how deep are those cuts really going to be? Powell's the master at leaving optionality open. And I think he did just that, using Jackson Hole to not commit to 25 basis points at every meeting or the need for a 50 basis point cut. He left it data dependent. And when I look at the totality of data that we have, I've been very constructive on the US economy, and I remain constructive. I think there is some cooling that we're seeing with respect to the economy. There are some cracks that we're starting to see with respect to the labor market, but none of those say immediate recession. None of them say that we're going to see the labor market fall out from under us. When you have corporate profit margins standing where they do today, which is the highest they've been since 2021, none of that signals that we're going to have mass layoffs. So I think the market is a little bit offsides in pricing in 100 basis points of cuts before the end of 2024. So there might be some indigestion. We're going to get the jobs and payrolls report next week. So I think that's going to be the next big catalyst and data point that might inject some volatility into this market. But I remain constructive, and I've been telling clients that if we do have volatility related to any rate pricing or concerns around the economy, I would be using that opportunistically in portfolios to continue adding to positioning.
Right, Matt, over the last 2 to 3 months, what we've seen is a lot of changes when it comes to jobs data. So 1 week you'd have some positive cues coming in, the next week you'd have negative cues coming in, then the markets would react accordingly. We have about a month and a half left for the September policy between now and then. What are the key variables that will be out over the next course of 1.5 months that could potentially either change the course or let the Fed be on the course as far as their own interpretation of many of these macro indicators are concerned?
Right. So that's a great question to follow. And I think what you need to watch is the continuing claims that we get on a weekly basis. So are we starting to see continuing claims, meaning that there's more people sitting around still looking for jobs that aren't able to be hired? I don't expect we're going to see those tick up too substantially. And in fact, we're starting to work through some of the volatility we've had in the jobs market from hurricane, issues in the US. So I think we're going to see a little bit more stability through the continuing claims data on a weekly basis. And it's the payrolls report that we're going to get the first Friday in September. That, I think, is going to be the first really critical data point for the market and assessing whether 25 or 50 basis points, either in September or November, is going to be likely. The inflation prints that we're going to get in between, we get PCE this Friday. There's going to be another CPI print in between as well. I don't know how relevant that is unless there's a mass spike up in inflation, which I don't expect to be the case. So I think really investors are going to be focused on the jobs market, but I do think we're going to get a little bit more consistency in the data just because there were some aberrations due to weather-related events over the past couple of weeks.
Matt, in terms of your own assessment, your own analysis, how much can this rate cut cycle come through? Now, of course, the street is expecting about 150 basis points over the span of the next 6 months. But we know how things have panned out over the last couple of years. And this has been since, the Federal Reserve has been indicating rate cuts. What is your own, projection when it comes to rate cut cycle here?
So my base case is that we're definitely going to see 25 basis points in September. We're going to see 25 basis points in December. November, I think, is a question mark simply because it's the day after the presidential election. So not that the Fed is supposed to be following politics or vice versa, but I do think that injects a whole nother element into the calculus. And I think having strong consensus on the panel of voting members is going to be critical. So if you see some robustness or strength in the jobs market, I do think November could be a question mark. So when you kind of take that, either we're going to get 50 or 75 basis points is my expectation. How do you translate that into the market and where there could be opportunities? I think number one is there are a number of rate sensitive pockets of the market that really haven't moved too much. We've finally seen life in U.S. small caps, and I think that trade can continue because there's just such a mass historic valuation difference between small and large caps. We're getting to an inflection point with respect to earnings. So I think that can be supportive. When I look overseas as well, I think there's a lot of opportunities in emerging markets as well. Emerging markets have been really challenged outside of some pockets of strength like India, which I've been very overweight. But I do think there's an opportunity for EMs more broadly, except, I'll exclude China from that equation, where a weaker dollar, I think, can translate to more enthusiasm around the growth prospect. It's been a perennial underperformer relative to the rest of the world. So that's another area of value once we start to get rate cuts. And I think that's regardless of the depth of cuts that we have moving forward.
Speaking of markets like India, well, many consider Indian markets to be expensive, but do you still think that there is opportunity here?
I do think there's an opportunity. A lot of clients have pushed back against India or continuing to add, saying that valuations are expensive, but valuations can be expensive. You can grow into that. And India, to me, is a long-term secular growth story where there's just a tremendous amount of opportunity across infrastructure, financials, and really it's been a broad market story that's been working. So for me, what I like in India right now is really playing an increase in quality. You've seen an emphasis on earnings delivering, on companies returning free cash flow to investors. So I think leaning into the best assets across sectors. So in autos like a Mahindra, where I think there's clear visibility. One of my favorites is ICICI Bank in the financial space. That's just, as upper teen return on equity compounder. I think there's still a lot of value there, and those names haven't fully recovered relative to the rest of the Indian market and the global market. So I do think it is a time to add, and it especially be adding on weakness.
All right, Matt, we'll leave it at that. Thank you so much for joining us and giving us your views on, the various aspects with respect to current markets. Of course, Matt Orton for now.
Metal stocks revved the market up today, adding 35,000 crore rupees to market cap. The Nifty reclaimed 25,000 today. After UPI comes ULI. The Reserve Bank of India launches United Lending Interface for faster loan dispersal, especially for MSME and rural borrowers. The platform facilitates seamless and consent-based flow of digital information, says the governor. Yet another setback for Paytm. SEBI lends show cause notice to Vijay Shekhar Sharma and the board of directors from 2021 over non-compliance with promoter classification norms during the IPO process. Ladakh gets 5 new districts: Zanskar, Dras, Sham, Nubra and Changthang. The Home Minister says the new districts will take the benefits meant for the people to their doorsteps. Russia launches massive air attack on Kyiv as Ukraine's military warned of missile and drone strikes. Israel, Hezbollah exchange heavy gunfire. Hezbollah fires more than 200 projectiles. Israel declares a 48-hour state of emergency, shuts down its main airport for several hours. Good evening and welcome. Thank you very much for joining us on Profit 360. I'm Nupur Talwar Suri. Now, as always, we begin with a look at the market action today. Now, it is a day of cheer as the bulls return to the Lal Street. All sectors except PSU banks and media ended the day in the green, and Hersh has all the details on this. Hersh, so it appeared to be a bull run really on the Lal Street.
Well, a strong day in markets to start the week, at least on the benchmarks. Even the broader markets did fairly well, given the fact that they outperformed the Nifty 50 last week. So they've started off on a fairly resilient note. The advanced decline in the positive, the breadth of the market decently strong to start the week off. But really all the action was within the Nifty 50 counters. We saw good traction, especially in IT. Something like an HCL Tech did very, very well. Metal stocks were in focus. They did very well in trade today. You saw both banking, but especially private banking within that entire banking pack participate well as well in trade today. Among the top contributors were heavyweights. Reliance on the back of AGM, HDFC Bank doing fairly well and chipping in its set of contributions on the Nifty. And within the IT as well, you saw HCL Tech do very, very well, up nearly 5% at close. We held on to the 25,000 mark, which is the key positive. Where it comes to broader markets now, given the fact that we saw a good outperformance last week, today's performance not bad at all. Around 0.5% higher, both on the Nifty mid cap as well as the small cap indices. Some specific stocks in play, of course. We saw something like a Paytm down 5% on the back of SEBI pulling up the promoter group on promoter classification, and we also saw good traction on the positive side in the last half hour or so on Aarti Drugs. Those were some big movers intraday in trade today. Aarti Drugs approving a buyback for 900 rupees a piece, a 50% upside, even from very close to 50% upside even from close over here on the buyback price actually. Now, just in terms of some of the other big movers, IT did well, of course. We spoke about metals, but oil and gas stocks were also in focus. You saw NTPC, ONGC do very, very well on the benchmark as well. But overall, it was a solid day of trade with the benchmarks leading the rest of the market.
All right, Hersh, thank you very much for that. In fact, as the Nifty reclaimed the 25,000 mark, here's Dinshaw Irani of Helios Capital on what's next for the index and the markets going ahead.
I don't think the rate cut is going to be exciting enough for us per se. By the way, if you go back in history, normally the rate cuts are followed by, the first rate cut. You don't see much of euphoria because already up to that rate cut, the euphoria has already been built up. So global markets are, I think, more or less discounting that. Given the domestic flows that you asked about, the foreign flows into India, I don't think there's going to happen in a rush, given that the way the capital gains were given out. The increase happened in July. You must have noticed that after that, only the FIS selling was happening. Prior to that, they were actually buyers every day. But from here on, they've been selling, except on days where there's this massive insider offerings, which they have lapped up with that discount coming through. So I don't see that happening in a big way. Maybe once the aggressive cuts start off, that's when you'll see the flows coming back into India.
Now, the Reserve Bank of India has launched Unified Lending Interface, or ULI, for faster loan dispersal. Now, the ULI is expected to play a similar role as UPI did in consumer payment space. And Vishy is now joining us to explain to us how this could potentially be a game changer. Hi, Vishy. So what's your take on it? To begin with, of course, explain to us what the RBI is intending to do with this.
Right, Nupur. So this is essentially a rechristening of a product that the RBI had piloted last year. Back then, it was called the Public Tech Platform for Frictionless Credit. That was a very, very mouthful of a name. But currently, the new name that the RBI has given to this entire product is ULI, or the Unified Lending Interface. How does it work? Well, essentially, what this interface does is it collects information about a borrower from all available sources, which could be the tax department, it could be Aadhaar, it could be land documents, it could be other sort of securities that this person owns, and will give you a likelihood of this person being eligible for a certain loan or not, and thereby the customer can avail whatever loans that they want in a relatively short span of time. Currently, it takes about roughly 8 to 10 days before a loan is cleared off, even for especially for the MSME and agri sector to which this is focused at. So yes, time will come down, and yes, this will make loans way easier for the borrowers. But remember that at this stage, it is still in the pilot stages. The RBI is talking about launching a nationwide sort of rollout, but that is still some time away. There's no timeline specifically given for that, Nupur. But lastly, what this will do is likely do for credit what UPI did for consumer payments.
So, Vishy, essentially what you're saying is that the intention is a noble one. We'll have to wait and watch for how that actually pans out. Thank you very much for joining us. Now, moving on, there's bad news for Paytm. The market regulator, SEBI, has sent a show-cause notice to Vijay Shekhar Sharma and the board of directors from 2021 over non-compliance with promoter classification norms during the IPO process. Now, Rishabh Bhatnagar joins us.